Well, it's still all-time highs in our market and we're not giving up on it just yet. So that's a great thing for the bulls. But let's find out what's happening in the world of commodities. Manisha Gupta is here. Manisha, what's the one commodity you're looking at today?
Well, Sonia, I'm looking at the crude oil prices where we saw 2.5% of decline overnight and the pressure continues in the Asian markets even now. We have posted back-to-back 2 months of declines when it comes to the crude oil prices. And for the month of November, we also already have seen nearly 6% of a cut coming in for the crude oil prices. October was around 5.5% as well. So it has been deeper cuts coming in for this space. $80 just about holding when it comes to the Brent prices there. Well, this is because the street was expecting deeper cuts given the recent price declines. And OPEC clearly did not deliver that. There also was a meeting on 26th of November, but with the kind of discord or disagreement that we saw within the members, the meeting one had to be shifted to 30th of November. And within this as well, we have seen the voluntary output cuts for the first quarter fall short of market estimates. So one, it is for a very small duration of only first quarter, and the decline or the output cut has only been to the tune of 2.2 million barrels. So that is what the markets are digesting right now and giving up on the longs that the street had created ahead of this meeting there. So let me take you through on what the OPEC really has done in sense of output cuts. So the heavy lifting clearly continues in from Saudi Arabia, the voluntary cuts at 1 million barrels per day. And then comes Russia with 500,000. Earlier, Russia was cutting 300,000. So they've added another 200,000 to this one. And then you see continuous decline coming in sense of voluntary cuts there. Iraq and UAE, anywhere between 200,000 barrels per day is what you're looking at. And then the kind of cuts that we've seen coming from other members within OPEC have continued to decline. And 50,000 barrels really is quite insignificant in that sense. The other thing also to note is that many of these OPEC members who have put forward these voluntary output cuts, none of them are from African countries, and that is where the discord between the members was in that sense there. So most of the market analysts now believe that the kind of deficit conversation that we were having for this quarter and the first quarter of 2024, that perhaps is not the case anymore. You could actually be looking at a surplus because we are looking at record high production from US at 13.2 million barrels. The US inventories have been rising. We've seen China data come in on the weaker side. The demand also has been declining. So whether you look at the demand side and supply side, we are in good shape right now in sense of supplies there. What the markets will watch out now is the Jerome Powell statements in US today in the evening. Further macro kind of direction would come in clearly from that.
All right. Thanks a lot for that, Manisha.